Welcome to Alpha Recap, your after-hours rundown of the market's biggest moves. We're wrapping up the trading day with headlines on healthcare regulation, AI infrastructure from Computex, record highs in banks and networking, and some big intraday ETF flows. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Lots to cover from today. Some regulatory shocks, a fresh AI narrative, and pockets of real market leadership. Let's dive in.
First up, healthcare. Massachusetts filed a Medicaid fraud suit against a unit of a major managed care company, and that suddenly put legal and earnings risk in the headlines.
Right. Analysts note this creates an overhang on that company's stock and could ripple through other plans that have heavy Medicaid exposure. The near-term story is legal uncertainty. Follow-up filings and company disclosures will drive volatility.
So, what really stands out here is how quickly a single state action can change analysts' downside scenarios. It's not just the headline. It's the potential for regulatory probes and for guidance to get reset.
Exactly. And layered on top of that was a separate but related regulatory move. CMS finalized changes to the independent dispute resolution process under the No Surprises Act. That's the arbitration mechanism hospitals, providers, and payers use to settle out-of-network billing disputes. The final rule gives more operational clarity, which vendors and some providers welcomed. HaloMD actually praised it, while also urging Congress to tighten enforcement language.
I mean, when you step back and look at this, on one hand, you've got active enforcement risk, the lawsuit. And on the other, you've got simplification that could reduce administrative friction over time.
Right. And the other thing is analysts now need to build both scenarios into valuation models. Extra downside for litigation, but medium-term margin and workflow benefits if the IDR rule really reduces arbitration headaches.
So what should listeners watch next on the healthcare front?
Follow-up legal filings and official company statements from the insurer involved, plus any regulatory investigations. Also watch provider-tech and billing vendors for disclosures on implementation and revenue impact tied to the IDR rule.
Got it. Moving on to tech and AI. Computex dominated the day, and Nvidia was front and center in coverage.
Computex really put a spotlight on Nvidia and Taiwan's role in the AI supply chain. Chip designs, server builds, board makers, and component suppliers all got attention. The coverage suggests a fresh AI infrastructure cycle is accelerating.
And that matters because announcements at a show like Computex can translate quickly into order flow visibility. If suppliers start talking about stronger backlog or earlier shipments, guidance can change fast.
Yeah, that tracks.
We also saw big cap tech and networking strength today. A major networking company hit a new peak, and the big investment bank we track also closed at an all-time high.
To put numbers on it, analysts reported that one bank finished the day at about $208, and the networking name topped out around $121. Those highs often trigger analyst model updates and can tighten implied volatility in the sector.
And that momentum connects directly to the AI infrastructure story. Demand for networking and compute gear goes hand in hand with more chip and board orders.
A notable intraday market signal was heavy activity in semiconductor-related instruments. One leveraged semiconductor bear product fell about 3.4% on outsized volume, which can indicate traders are removing bearish hedges or just rotating into semiconductors via different vehicles.
Short reaction. Let's unpack that a bit. Leverage products amplify moves. So when they see outsized volume and a sharp drop, it often means participants are changing how they express a bet, either covering shorts or reallocating exposure.
Which brings up liquidity risk. Several ETFs and low-price names had elevated volume today. That magnifies intraday swings and execution costs. Data suggests risk managers should check sizing and liquidity assumptions before acting on momentum alone.
Totally. For listeners who aren't as deep in derivatives, think of leveraged ETFs like a magnifying glass on short-term moves. They're not ideal for long-term exposure because compounding and rebalancing can distort returns.
Honestly, I was a bit surprised by how quickly some of those flows moved. It really highlighted a rotation into AI and related suppliers, while some explicit bearish instruments got trimmed.
So the watch list from Computex is straightforward. Supplier deal announcements, comments on order timing, and any guidance on backlog from board and server component makers aligned with Nvidia's ecosystem.
And for investors tracking themes, look for margin commentary. If supplier margins start to expand or CapEx plans accelerate, that reinforces the infrastructure investment cycle thesis.
Switching gears to energy, utilities, and infrastructure. There were some selective moves today too.
Hydro One filed with Ontario regulators to build a local reinforcement project. That's a classic regulated asset growth signal if approved. And Municipal Data and Power issued a national request for proposals for a planned site tied to grid data and power, about $4 billion of potential activity.
PBF Energy is presenting at a credit conference next week, with materials to be posted afterward. Relevant for fixed income investors watching refinery fundamentals and credit metrics.
Watch the regulator's response to Hydro One's filing, the conference materials from the refiner, and RFP responses for that large grid site. These are multi-quarter stories, not immediate share movers, but they matter for muni credit and regulated utility narratives.
Quickfire corporate and small cap items from today.
Copper Intelligence announced a 1-to-100 reverse split and other corporate actions under review. Expect low liquidity and potential repricing. A large Japanese postal investor sold about $1.3 million of an insurance company's stock. A modest stake sale, but worth watching for follow-up changes. A software company launched an AI-embedded association management product. Product launch, no financials yet. And a regional airline flew its 1 millionth passenger from a particular airport, a data point on travel demand. Also, a university launched a Veterans Network initiative. Strategic, but no immediate financial impact disclosed.
Short reaction. On the ETF and trading signals front, we already touched on the leveraged semiconductor bear move. Another short-term product tied to small caps fell around 1.4% on heavy volume. More evidence of trader activity in leveraged arenas.
And a Bitcoin futures ETF and some ultra-short bond and alternative ETFs had outsized volume too. Those are liquidity-driven intraday signals. They can amplify portfolio swings, but aren't directional calls in isolation.
There was also a geopolitical sidebar. Bulgaria said it would reduce U.S. military aircraft stays over a visa dispute. It's a diplomatic development that could add regional risk and influence defense contractor sentiment if it escalates.
Not great timing for any supply chain complexity, but it was reported more as a diplomatic note than a market mover today.
Let's wrap with patterns and the main takeaways from today's tape.
Pattern 1. Healthcare headlines were a major source of sector-level volatility. The lawsuit increases downside risk, while the IDR rule may reduce operational friction. That bifurcation is critical for payers and provider tech.
Pattern 2. AI infrastructure is the dominant thematic trade right now. Computex focus on Nvidia and Taiwanese suppliers, combined with record prices in selected networking and financial names, is reshaping supply chain and CapEx expectations.
Pattern 3. Market leadership looked bifurcated but constructive. Banks and large cap tech hit highs, while leveraged bear products and semiconductors saw heavy flows, suggesting a rotation into AI and related areas.
And practical takeaways for listeners?
1. Watch for follow-up legal filings and company commentary in that insurer case. 2. Track supplier announcements from Computex participants and any backlog or order timing commentary. 3. Keep an eye on conference materials from refiners for credit signals. 4. If you trade ETFs or low-priced names, recheck liquidity and position sizing because volume spikes magnify execution risk.
Good checklist. And remember, our discussion is informational. Analysts note risks and potential catalysts, but we don't provide personalized investment advice.
If you want to follow up, the things to watch tomorrow are company statements from that major insurer, supplier follow-ups from Computex, the refiner's presentation materials after the June 3rd conference, and any regulatory filings around the Hydro One project.
Final sign-off. Thanks for listening to Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks. See you next episode. And don't forget to send us your questions at stockalpha.ai.